Good morning and welcome. It's that time once again, the Patriot Radio News Hour live. What is it? Tuesday.
My Friday.
Your Friday, yeah. Wendy's in studio today.
I'm
Joe Jaquin, CEO of the Patriot Trading Group. Our toll-free number, 800-951-0592. We got a lot to talk about. I'm going to say this. There's going to be a new Federal Reserve chief come the end of February. We're going to talk all about it. It's kind of got the markets in a different place. We'll recap it all. There's been all kinds of news and speculation as to who it's going to be. I'm going to tell you who I think it's going to be, and it's going to be one of those people where, just like Donald Trump has said, I don't like high rates, and it's going to be someone extremely, extremely dovish, and it's going to be very, very good for those of us in the hard assets arena. You know, we've been watching here over the last, couple of weeks, gold and silver falling, and we've seen the dollar rise, the 10-year note rise, all over some dots on a chart, if you can believe that. And then earlier this week, and that may have even been late last week, and I think it was late last week, a name leaked out as to who it could be.
And who is that?
Well, I'm building up.
Okay, he's building up.
And I saw the name. And I was like, there's not a snowball's chance, and you know what, that person's going to be getting the job. If you've listened to anything that Donald Trump said, and today, and again, not surprised, I'm not surprised, a different name has come out. And this is the guy. That's just my opinion. We're going to break all of that down for you. But the reason why Wendy was here is, number one, she did a time-honored Arizona tradition over the weekend that has complained for the last 2 days, and I want to share it with you. And then, of course, we've got a great opportunity, which is really why she was in here.
Right.
But in a lot of places, right, you got to mow the grass. You got to shovel the driveway, right? These are things
rake the leaves.
Rake the leaves
Right.
and all. You don't do any of that in Arizona.
No.
You don't shovel snow. You definitely don't rake any leaves because you actually have to have trees
Right.
that actually have leaves, right? And you don't mow the grass. And if you do mow the grass, it's not like it's a yard full of grass, right? It may be like a 10 by 15 foot oval of grass, maybe. But what you do here in Arizona, and I don't know what happens, but you have to every year. I call it the annual raking of the rocks, and then and it seems like every 3 to 5 years, depending, you got to add rock. I don't know where the rock goes, because everyone's front lawn, and I say 99% of the people, their lawn is rock.
Yes, my backyard is like that too.
Right, it's just rock.
It's rock.
And sometimes you got to rake it because where you travel, the areas that get traveled, the rocks, get pushed along the edges, and sometimes you got to rake them back into the middle. But I don't know where it goes, but it does. Like every 3, 4, 5 years,
I know
you gotta buy more rock.
Right, but I know where mine goes because I have 5 dogs.
Okay.
So in my backyard where the rock is, because I have a big pool and then I have rocks, they poop. So you got to pick up the poop.
So you're saying as you're picking up the poop,
I pick up
1 or 2 rocks per
rocks.
poop pickup.
A lot of rocks. But that's not what I did. I was moving river rock. John
river
and I
rock.
were moving river rock.
Because you wanted to have decorative rock.
No. We have this area that's right by the hose, and every time I have to go turn on the hose, I fall on the rock. And I said to John, I don't want these river rocks here anymore, after 6 years of living there. So we got a wheelbarrow from a neighbor, and we bent down, and we picked up 5 wheelbarrows full of river rock.
The moving of the rock.
Right, moving of the rock, and I was bending over and standing up, bending over. And Sunday night, Monday morning, I could hardly move. I was just like, why did I do this?
And I'm only laughing because it's only in Arizona where
you have to move
the moving of the rocks, and whether it's moving river rock or, that's the other one. I forgot about that. Yes, moving rock from one place to another. It's like furniture.
Right.
And let's rearrange the rock. So she spent the whole weekend rock rearranging.
Right, and now I can't move.
And now
now I can't move. And he laughed at me, but I found a good special, so I'm happy.
We have a great special.
It is.
We're going to talk about that when we get back, and then we're going to talk about why I think the whole market is getting ready to change. And really, it was never going to be the way they thought it was going to be anyway.
Rock around, charging from the gate. Rock around, carrying the weight. Rock around, oh, rock around, the sun upon my skin.
Welcome back, Patriot Radio News Hour. Our toll-free number, 800-951-0592. The website at allamericangold.com. Today's special, we don't have it on the website because it's not an item that we normally carry. Matter of fact, we've only sold it once, and it sold so well that we've been trying to get them back ever since. If it's something where we can get to the point where we may be able to keep them in regular supply, I'll add it. I'll add it to the website. But right now, we don't think we can do it. So we're going to wait on it. But here I'm going to give you the special, and then I'm going to tell you why you need to have it. Because something very important happened today. It doesn't have to do with Las Vegas. Doesn't have to do with Tom Petty passing, which, by the way, broke my heart. Just loved his music. But it really has to do with what we really were talking about yesterday. They didn't fix anything. What they've done is covered it all up with a lot of debt, and I mean a lot. And just as I'm sitting here, they say they can't see the bubble. It's right in front of our face. And it's still, hey, listen, they're still filling it up, right? But it's getting ready to get done. We have 2 different items, and you can mix and match. You can buy all of one or all of another. It doesn't matter. I think it was, 2 or 3 months ago, we had gotten some in, and we had actually got them on accident. And we sold them out. We had these silver 1-ounce silver bars, and they came in these sheets. And there was 10 of them in a sheet. And what makes it kind of neat is you can handle them. And it's really it's a pretty sturdy sheet, unlike some of the other sheets that coins come in. And you can see them and flip them around, because the one thing with silver that I always hate, like the Silver Eagles, they come in the tube, and when you take them out, because you want to look at them, and the oil on your hands get on them, and then they tone, and not that the toning hurts the value, it just doesn't look as pretty. So they come in sheets. We have two different types. We've got sheets of 10 and then sheets of 20. The sheets of 10 are $185. The sheets of 20 are going to obviously be double that, right? So double the 185 is $375. That puts them at like $1.85, $1.84, $1.83 over spot. So you're getting, and with silver, we know buying silver that close to spot has become very, very difficult. So this is something that's very affordable. As far as, you know what, you want one sheet, right? It's $185. If you want a sheet of 20, it's $370. I got 50 sheets of each. So the last time we had these, I only had 20 sheets, and they went, I think we were out before the program ended. So I've got 50 sheets of the 10, and I've got 50 sheets of the 20. These are 1 ounce, individual 1 ounce silver bars. And the rows are 5 across, right? And one's got 2 rows of 5. The other sheet's got 4 rows of 5 at 800-951-0592. Now, we're going to very quickly talk about what's happened over the last 3 weeks. Because, you know, we had gold, at highs for the year. We had a Fed meeting coming. So kind of like with a Fed meeting with a press conference, right? And so we've gotten into this pattern where we know Fed meeting with a press conference, they're going to sell, right? They're going to sell before the meeting and then wait. So they sold it down to, $13.30, and, silver was above $18. And then the Fed meeting happened, and they focused not on what Janet Yellen said. Remember, it was one of those press conferences where I was telling you, wow, that was maybe the worst Federal Reserve press conference I had seen. And it seemed like Janet Yellen was very disjointed. It didn't make a lot of sense. And instead what they did is they focused in on this dot plot chart. And the dot plot chart, in simple terms, every Fed governor, and those that are sitting, you got Fed governors and those that sit on the board. And I think, and I know the board's not at full strength right now, but there was, 15 to 17 dots. And what it was is, where do you see interest rates? And it's got dates. One date was December, and it went for like 4 years. And actually, I guess that wasn't true. It went for 3 years. My bad, 3 years, this dot chart. And they focused in on December, where there was 4 dots for, no rate hikes, and a bunch of dots in the, I guess it would be a rate hike camp, but it really wasn't a rate hike camp. It was the, hey, I'm not giving up camp. And they made this big deal about it, and I didn't understand it because the dot chart really hadn't changed. It really was pretty much the status quo. But nonetheless, that's what they like to do. And then, of course, in the following, after the meeting, we heard 3 Fed governors in a row come out and say no rate hikes. Then you got one that said yes. Then you had Janet Yellen come out and say, hey, we may be wrong about this inflation thing, which was kind of like, hey, casting doubt. But then late last week, which kind of really drove the price down, the name Kevin Warsh came out as the front runner to replace Janet Yellen. And a lot of you probably don't know the name, and that's okay. That's why you listen here, because I know it. And I was in shock. I'm like, there's not a chance that this guy gets it. He was one of the few that was very strongly against quantitative easing. He is very hawkish. He believes that rates are too low. He believes that the idea of quantitative easing was a bad one. And you know what? Quite honestly, he was probably right. And the dollar took off, and I'll just give you as an example. The dollar hit a low of 91. It's now at 93.52. It got as high as 93.92, so almost 94. Which in a matter of, a couple of weeks, that's a big move. I think that move's about over. The 10-year note, which right before the meeting got below 2.1, rose all the way back to 2.35, 236, and is now, after today, with the new name, is moving back down as well. And I don't understand why they would do that. Pick a guy and say this is the front runner. Yes, Donald Trump did interview him. Donald Trump actually interviewed 4 different people very quietly. I think that's part of what caught the market off guard, is it didn't make a lot of fanfare. But he has interviewed 4 people to replace Janet Yellen. Janet Yellen's term ends at the end of February. Now, I kind of had speculated over the last several Federal Reserve meetings and listening to Janet Yellen speak that she was on her way out. Donald Trump has made no bones about the fact that he wants rates to be low. This morning, another name came out. I think this is going to be the guy. According to J.P. Morgan, there is now a 44% short Treasury position in the marketplace. By the way, that's the highest in 11 years. Right? That was right as get ready for the crash, right? Everyone was saying, okay, interest rates are definitely going down. And the reason is there is a new name being mentioned as the new Federal Reserve chief. It appears what spooked the weaker shorts into coming out this morning is a rerun in a story from Politico that the speculation that Maverick Hawk Kevin Warsh is the front runner to replace Janet Yellen. However, it now appears that a far more dovish candidate has emerged in Jerome Powell. Jerome Powell currently sits on the Federal Reserve Board. He doesn't oversee a bank like the San Francisco Fed or the St. Louis Fed, but he is on the Board of Governors. A far more dovish, candidate than Warsh, who has never lashed out at Fed policy, who is a favorite of current Treasury Secretary Steven Mnuchin. So this is the guy Mnuchin likes. He is also a guy who has spent most of his career, at least the part where he was actually on Wall Street for a while, and I'll get to that in a minute, but he has spent most of his career working on regulation. And, of course, one of the things Donald Trump has been doing is eliminating a lot of regulation, and Powell was a guy who was very dovish. He didn't want a lot of the regulation that we have seen. And now I think we're going to see a big shift. They said that the process is now Jerome Powell along with Steve Mnuchin favoring Powell, and that Warship, who was always viewed as a top contender, does not really know President Trump well. And, of course, his policy of what he's been on record as saying doesn't fit. They say a decision could be made in the next 2 or 3 weeks. Now, remember, Janet Yellen's term ends at the end of February, but it appears that Donald Trump has made up his mind that Janet Yellen may not be the one that's going to be appointed. So we'll have to wait and see. But I think Jerome Powell is going to be the guy. And the only reason why I say that is if Donald Trump means what he says, which so far I think he does, right? He wants less regulation, and he doesn't want high interest rates. Powell's the guy. We'll have to wait and see. I'm not sure. I thought Janet Yellen still had a chance, but according to the odds makers, Janet Yellen is on her way out. And now it's a question of who it's going to be. You got me. I'm on record. I think it's going to be Jerome J. Powell as our new Fed chief.
This is the Phyllis Schlafly Report, a daily broadcast from Phyllis Schlafly Eagles, a national volunteer organization founded by Phyllis Schlafly and continuing to uphold her legacy by opposing radical feminism and representing a traditional conservative perspective in our nation's capital. Now from the Phyllis Schlafly Center studios, here's Ryan Haidt.
In September, President Trump released a plan to phase out the illegal Deferred Action for Childhood Arrivals program, or DACA. In this release, Trump has not revoked anyone's legal status, nor is anyone in danger of being rounded up for deportation. DACA recipients still have the same rights they had before, no more and no less. DACA was never supposed to be permanent. When President Obama unilaterally instituted the program in 2012 without congressional approval, he promised recipients temporary protection for 2 years at a time, and President Trump is honoring that pledge. Remember, all DACA recipients are illegal aliens, citizens of another country who came here illegally, even if they were brought here as children. Many of them actually came here on their own as teenagers, and many of the children were brought by smugglers or traffickers. Among those who preemptively denounced Trump's announcement were Apple and Microsoft, both of which said they have DACA recipients on their payrolls. These companies, of course, didn't say how much the so-called dreamers were being paid or why no U.S. citizens or legal residents could be found to do those jobs. Apple and Microsoft happen to be the biggest abusers of a system that allows U.S. technology corporations to avoid federal tax on earnings parked in overseas accounts. Apple's untaxed cash hoard has reached an astounding $246 billion, while Microsoft is in second place with $131 billion overseas. A group of CEOs signed a joint letter claiming that ending DACA would hurt the economy, but Treasury Secretary Steve Mnuchin isn't buying it, saying, "There's a lot of people that left the workforce, and our objective is to bring them back into the workforce." In the furor over what to do about dreamers, it's important to remember that DACA was never lawfully instituted by President Obama in the first place. DACA's companion program, known as DAPA, was thrown out by the federal courts last year, and DACA was likely to suffer the same fate.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Illegal immigration burdens our schools and social services and opens doors to criminals and terrorists. Outdated visa programs divert jobs from Americans. PhyllisSchlafly.com chronicles these outrageous unfair practices and provides answers. Go online to PhyllisSchlafly.com. Thanks for listening, and join us next time for the Phyllis Schlafly Report.
Backwards, backwards.
800-951-0592. 3 lines still open on our sheets. These are 1-ounce silver bars. if I am right, and I'm right most of the time, I'm wrong sometimes, but I'm pretty good at this. I think the dollar correction, the dollar's still, the path is down. I think the rumor mill is starting to settle down. It sure appears that Janet Yellen is going to be out now. Jerome Powell is my front runner to replace her. That is going to put a stop, I think, immediately to rate hikes. And really, quite honestly, with what I've got to share next, it makes sense. And I think the dollar is it bounced off the bottom. This is kind of one of those dead cat bounce. A lot of rumor and speculation, and I think all of that is going to be just that. And the facts still remain. We're kind of in the same spot we've always been. But you've got two different items here. We've got sheets of 10 1-ounce silver bars. I will say this. I'm not a huge silver bar fan. And, of course, and I've said this a million times, I'm not a huge silver fan in general. Just because it's bulkier, it's heavier, right? I'm a gold guy. But, man, you just can't beat the price. And when you can't beat the price, you got to buy it. When you're talking $1.80 over spot, $1.85 over spot, you got to buy it. So sheets of 10 are $1.85. And then we've got some we've never had, the sheets of 20, and those are $3.70. If you want to use your credit card, we take Visa, MasterCard, American Express, Discover. Add $5 to the sheets of 10, $10 to the sheets of 20 on the credit card. If you've never ordered from us before, and you're like, man, I want to do it, but I'm afraid. It's the easiest thing you'll ever do. You just call us up. Wendy's going to answer the phone. You just tell her, hey, Wendy, I want the silver sheet special. And she'll say, well, which one do you want? You want the 10? You want the 20? You can just tell her, hey, I want the 10. Okay, how many do you want? You want 1, 5, 10? And you just tell her how many you want. She's going to give you the total. You pay for the product. Most people pay with personal check. But like I said, if you want to use your credit card, you can do that as well. And then we ship the product to you. Once we have good funds, we ship the product to you, registered, insured, U.S. mail. If you bought a large quantity, like if you bought 20 of the sheets of 20, that's probably going to go ground UPS. But otherwise, signature required. But either way, whether it's UPS or U.S. mail, you have to sign for it. So they're not just going to leave it at your door where someone could take it, or that's not going to happen. And that's it. Right? We don't have a phone room here. We don't call you. We don't do any of that stuff. And we just keep it simple. When you call us, we're not going to try to tell you, oh, don't buy that and buy something else, right? That's the old bait and switch. You don't get any of that. There's no hard sales tactics. And it couldn't be easier. 800-951-0592. And this, you know what? I'm going to share. I'm going to read this with you. And this is part of our problem. Is when we elect these politicians, once they get in charge, right? They always have the miraculous way of all of a sudden becoming somebody else. That just happened today. In selling the Republican tax plan, White House budget chief Mick Mulvaney has moved away from the principle that made him a standout in Congress. What made him stand out? Mulvaney used to be the guy leading the charge about reining in the federal budget deficit. Now that he has the ability to do so, nah, I don't want to do that. Early estimates of the GOP tax framework released earlier last month, will cause the budget deficit to balloon, Mulvaney said. And only some of the broad tax cuts are canceled by scrapping deductions and closing loopholes. In other words, at least what we've seen so far, this thing's going to be even worse than I thought. On Sunday, the Office of Management and Budget, which is Mulvaney is the director, argued that deficits are necessary to unlock the growth the Trump administration wants to see. Now, remember yesterday's show. What did we say was really happening over the last 10 years? Something that has never, ever happened before, which is when you strip out the growth added by federal debt, we're actually still in the recession. And not just by a little bit, by a lot. Right now, the federal yearly budget deficit is almost 8% of all GDP in the country. That's just the deficit part. Right? We know federal spending is almost 25% of the entire GDP. And now the Office Director of Management and Budget came out and said, hey, guess what? They're going to get a lot bigger. We need to have new deficits because of that, Mulvaney said. We need to have growth. And I guess I want to, the question that I want to know is at what cost? Is that really the growth we're looking for? Because anybody could do that. Right? This is why, you know what, our founding fathers never wanted these guys in charge to begin with. Anybody can get growth by running huge budget deficits. If we simply look at this as being deficit neutral, talking about the tax cuts, if we ran a plan that didn't add, you paid for it. Okay, that doesn't mean the deficit's going to go down, but we're going to try to not increase it anymore. You're never going to get the type of tax reform and tax reduction that you need to sustain a 3% economic growth. And I'm looking at it, 3%. We can't even do that anymore. And now, and at least here, you know what, I'm going to give him some attaboy. Because at least he's being truthful. What does that all mean for all of us? We're going to talk about that next, and why I think this actually is why Jay Powell is going to be the next Fed chief. Pick up those silver sheets, 800-951-0592. Welcome back, Patriot Radio News Hour, 800-951-0592. Listen, I know it's hard, and I know for whatever reason, everybody knows what to do. I promise you, this is exactly, really, quite honestly, I'm going to give Mick Mulvaney an attaboy. He's telling the truth for once. I want to give you a little color about who this guy was. He was the founder of the Freedom Caucus. Right, the guys that were, wouldn't vote for the health care stuff, right, and Rand Paul and Ted Cruz and all these guys that were talking about deficit neutral things. Superstorm Sandy, remember, took out New Jersey. He's like, hey, listen, if you want relief funds, where are we cutting? This was him. And now he's saying, listen, we can't grow without it now. This is the new America. The only way we know how to do it is by creating more debts. And I'm going to go all the way. Listen, this was a policy that took decades to come to fruition. You go back to all the free trade agreements, all of the things that you know we didn't want, that you knew was going to lead to the destruction of the United States as we knew it. It's all happened. And they're trying to tell you that what a great thing it was. Wall Street's at an all-time high because the guys like Mick Mulvaney are coming out and saying, listen, we'll just pile on the federal debt. As it stands right now, and the number keeps getting bigger, and it's going to keep getting bigger, they're now saying $2.4 trillion over the next 10 years is going to be added to the budget deficit. On top of the $10 trillion that they already said was going to be added, now you're at 12 and a half. Listen, I'm telling you, just $20 trillion. That is what it's going to be. Why? Because I said so? No, because I know how to do math, and so does this guy. And the realities are, this is what has happened. We used to be able to get 3% GDP. That was a bad year without a budget deficit. Now they're saying we can't get 3% GDP growth without adding trillions of dollars to the deficit. And this is why a guy like Jay Powell is needed. You can't finance. How are you going to finance 30, 40, 50 trillion dollars? You can't do it. Even at a 2% Fed funds rate would be ridiculous. You know it's ridiculous. I know it's ridiculous. Janet Yellen knows it's ridiculous. Jay Powell knows it's ridiculous. But you know what? It sounds good. And then you have to ask yourself the ultimate question. What's it going to do to our future? And you start looking around. You start realizing what's really happened. We got 44 million people working side hustle jobs. Yesterday I told you, over the last 10 years, we've only created 3.8 million full-time jobs total. There's almost 4 million people a year that graduate from college. We can't even, we're creating about 388,000 full-time jobs with 4 million people graduating from college every year. We're adding 2.3 million people to the population every year with only 388,000 full-time jobs. How bad is it? I'll give you an example. IBM, remember them? For the first time, I think in history, IBM now employs more people in India than it does here in the United States. And I bring that up because IBM used to employ, 500,000 people in the United States. It's now down to 120,000. Went from, and this was 1999, they had 400,000 people working in the United States. And IBM, you worked full time. There's now 120,000. They employ 130,000 people in India. And I bring that up, that's just an example. You know, when we talked about, and really when my uncle talked about in the mid-'90s what NAFTA and GATT and free trade was really about, and globalism and the new world order, this is what it's left us. We went from $100 billion deficits to trillion-dollar deficits. We went from a working male ages 25 to 54, 96% of them working, to now we're in the 80s. The list goes on and on. You just look at participation rates and all those other things, and it's all happening. It's in slow motion, but it's happening. Problem is we're getting ready to hit the downhill. Patriot Radio News Hour. We'll be back right after the break. All you need to know right here. Mick Mulvaney, Mr. Deficit Hawk himself, says forget all that. Yep, I know that's how I got elected and everything else, but forget it. Can't do it. And then you start thinking about what happens when you enter this phase. Do you think this is the good phase? I mean, Wall Street's at an all-time high, right? Even Warren Buffett today came out on the, it's okay. It's justified, these ridiculous prices, because interest rates are so low. And the realities are just the opposite. It's okay for a little while. He's right about that. Hey, for a little while that works. But then slowly but surely, they get so big. The deficits get so enormous. The burdens become unpayable. Snuck in between all the headlines on Drudge today, there's a great little article about what's happening in all the cities in Connecticut. Go find it. I'm tired of telling you about it. We're going broke, sure as I'm sitting here. And now they're saying, listen, we need to go broke faster. That's their solution. They know the budget. These tax cuts aren't going to pay for itself. And the reason actually is simple. Interest rates aren't at 19%. Right? Because then you can cut the you-know-what out of them. Heck, interest rates aren't even at 4 or 5%. There's no cutting to do. And all we're looking at is what we're giving away more money to corporations that are already trading at stock prices that are way overvalued. And, you look at history and you see them all the time, and then they talk about we can't see it. You need to know. Get ready. Man, do yourself a favor. When nobody else is buying, that's when you need to buy, and that's what's happening here. We got sheets of silver bars. We got two different sheets. We got a sheet of 10 and a sheet of 20. The sheets of 10 are at $185. That's way below $2 over spot. Like $1.80, $1.85, depending, because silver moves quite a bit. Between $1.80, $1.85 over spot. They're $185. If you want to double it and get a sheet of 20, they're $370 at 800-951-0592. I think we've kind of seen the best case scenario, right, which is what they always follow, which is, oh, yeah, there's going to be a rate hike in December, and Kevin Warsh is going to be the new Fed Reserve chief, and now I think we're kind of getting back to reality here, which is, probably not a rate hike in December, and probably Jay Powell is going to be the new Fed chief, which means what? Easy policy. And really, in looking at what Mick Mulvaney said, I don't see how you can. We're going to be adding trillions more to the deficit. Patriot Radio News Hour, 800-951-0592. Thank you so much. It's your support and your orders that keep us here. Take care. Have a great day.